Hello traders, this is Alex with the the commodity matrix. Well, the matrix, we'll just call it program. Here's my X account, kind of my standard intro. I did post this, what we're going to review. I'm going to quickly go through these charts. I want to go through then the actual futures charts on bar chart and kind of review them as well. Real quick, this is my second attempt at this video because I got too wordy. I could talk charts all day and I forget what my whole premise is. So I wasted an hour of my day already. All right, this is the CBOT Man 33 is my handle. Again, you can review this at will. Let's go now to the actual matrix chart. Okay, here's the matrix stuff that you just seen on the internet, and this is, I kind of save everything. Now again, I'm not trying to make it into an actual system, but it is, right? But again, we arbitrarily started on the first of the year, so I think that was a low on a lot of this stuff. So again, no big deal. I mean, you have a huge loss again because you're arbitrarily picking a date. So I didn't like wait for the trend to change and then go with it, right? I bought it or sold it based on that January 1st. So the results are a little skewed, which is fine, which happens quite a bit actually. First of the year is a pretty important trend change. The quarter moons are the equinoxes are pretty important trend change. I do keep that here to kind of show the December equinox closes. And I'll wait till the next one, then I'll probably put the March one in there. But you can see we've had quite a bit of movement. Crude up 58%, right? That's pretty big since the December 21st. And orange juice down 53%. Bitcoin down 13% since the end of December. So wheat up 15%, which is pretty interesting, and definitely looks like a low on the wheat. Now we did have a trade in the orange juice, crude as well. Back, I don't think I put that one out when I did the previous video. So there's been a few changes. Rest of them are pretty equivalent. Let's run through the charts. Corn stops up there, pretty dead. Beans, this is again, I thought we were going to get stopped out, but we didn't. The stop stayed at the same area. Wheat though was kind of similar, but it did trickle down and then bounced right up. So again, our stop is relatively close, but again, a pretty classical wheat. Now again, here is your squaring of the range coming in next week, right? Because again, the moons happen so far. These moons are at the Friday, right? So again, I trade quarter moons and square of 9 for pricing. But this is a 1-to-1 speed, so the squaring out of this range is pretty key. Could be a high, could be acceleration, right? I mean, this bottom looks pretty good. Can't really see it on this chart, but the bottom is a nice, good textural bottom that I like to see as any tradable thing like stocks or commodities. Here's the meal, kind of still inside this range, just a chopper, nothing to report. Coffee, really, we're coming off the highs of the solar. Here was, which was a high. This solar was a low. Solar eclipse. You know, when I say solar or lunar, I mean I'm usually talking about the eclipses, which is the main component for me. And Gann, right? Gann used to forecast all his markets based on the solar eclipse and 90 degrees thereafter, which again, it's this one here. I think some of these I didn't highlight, but it's May 16th zone is our in between, right? This is the 90 degrees. This is 180, right? Because you have 2 eclipses in a year. This divides it in a quarter, or 90 degrees, right? So this is your solar to solar. 90 degrees from here is May 16th. So Gann would be projecting something on the 16th, or be watching it right now. He didn't trade basis the eclipses or the master chart or the square of 9 or the square of the range, right? He didn't trade on that, but that's where he found his points of a potential bottom top acceleration zones where you can pyramid, right? Or where you can start to do things or look one way or the other because of a certain zone. Well, if your market's rallying and made a high here in the eclipse, obviously he was waiting for that. Or here's a solar eclipse and it was a low, right? And lunar was the actual low. So again, that's when he would turn on his 2-day trend line indicator chart and start going with it. And he would have been long in here, right? I use these charts here. Gann used a 2-day trend line indicator, a little different, but similar. Both have pros and cons. One thing that this is, it doesn't have any, this type of system that I'm using right here doesn't have any filters. So obviously when silver's moving, 40 grand in a day, no more than that, 70 grand, when it's moving so fast, you can't, trade on a 3/4 moon basis like I'm doing, right? So obviously you would, now this one does, I don't care about any of that because again, I'm not trying to show profit or loss, right? This is just longer term trend on the thing. Anyway, that's how it's set up. So no filters. Here's the cotton. I talked about this one. This base was very nice, right in the zone. This eclipse, which I liked this action. We bought it here, right, on the December contract. I liked all that. This area here I talked about in the last video, I thought should have been a high, and to be careful, and it just went through it like nothing. This is that 1-to-1 squaring of the previous range, right? So again, it tells me we're undervalued for whatever reason. Fundamentally, I do not know, but this tells me that you buy minor dips if you get them. Like right now, if I had to tell you where to buy it for next week, right, since that'd be the next new moon period, I'd be looking down in here. That's a minor break. Doesn't change it, our system by long or short. It just sorts people that have got too tight of stops get knocked out or in, right? So around 79-ish, somewhere in there, give or take 20 cents, would be where I'd be buying if I had a gun pointed to my head, and then you risk your point from there. Or if you're buying futures, you can buy one. If you buy one futures, buy a put against it, that kind of thing. Here's the sugar. I like this pivot. Massively projects a massive bull, and the speed is what I like. These fast moves up, fast moves down, create a fast environment. So the future is pretty quick, right? So I always kind of multiply everything by 5, 5 waves, right? This is 7 bars. So in my mind, I think that from this low, we could have, 35 bars will be the pinnacle. I can't quite see it because my line's in the way for this. So this is the 5-wave projection would be in November, right? So you could go out to again, I like trading March, so I'd still buy March calls, but you could go out and buy out of the money March calls and play a 5-wave continue. Because again, or this next wave, if it does break this pivot, now that's your guess because you don't know that, but I'd be guessing a little bit down here. Now we can make a new low, don't really matter, right? Here's your squaring of the range, so if it goes down here, just by if the next moon period, this next week, it could go down to 1416 on the March. Again, I'm trading March of 2027 sugar futures, right? So you could go down to here, and it's into that 1-to-1, right? The speed line, this red line, down to here. So that makes sense, right? You still could do that, and it wouldn't really matter. And I would like that as a trader, and then I would be looking at buying these calls out of the money. Again, we know that this next leg will probably be just as fast, if not faster, typically. Anyway, juice. This is where one of the trades we just had. Kind of a trap here. I assume we're gonna go down here. It's just a chopper. Long term though, it looks pretty weak. Again, we're 75% down to this low here, from the biggest bull in history of mankind. So the silver guy saying silver should never break. Well, it's gonna. It just happens. I'm sorry. You don't know any of the fundamentals. You think you do, you don't. You don't have no clue. The internet's a fake deal. Half the shit you read is bullshit. So, with that note, that positive note, this is a sluggish pattern, right? I mean, you went through the bull, which it did have. You went through the bear, it didn't break. I'm guessing it'll probably stick around a little more. But if you ever make a new low, something's up. I would assume it's just gonna keep dragging, slow but methodical. You've lost all the bulls out of the market, right? Because they got hammered. They lost 80% if they were stacking. Here's crude. Again, pretty good pop. I like this bottom. Obviously, we had the trap, which the bear trap, right? Because it made a new low. Bear trap made a new low. That was I like that. Then we broke this pivot, minor as it is, and we broke the swing, minor as it is, and that set off this big emotional roller. Because again, the gold. Here's the crude traders. Oh, silver's flying around. Gold's flying. Copper. Why is crude so slow? So they created their own shit, right? I mean, I think I don't have to get conspiratorial, but this bar is a concern. Gold did it, silver did it, copper. Any of these big bulls have this huge bar. Is it a high? Is it low? I don't know. I mean, I don't. If the fundamentals of crude are different than silver, right? I mean, we always produce crude, always. So we have a lot of abandoned wells that are now online. I guarantee you. So fundamentally, we shouldn't be short supplied here in the U.S. This is a U.S. futures. Don't forget, this ain't a global deal. So, but this trend line, we're short because we're short here because it snapped it out and immediately went up. And then the short term trend is now up because we're 2 boxes above the previous, right? So that's why you see up here the short-term trend is up, which that's there, and this is I'm still short with stops here. So it's a high-risk trade. I talked about not liking the stop that I had here, but there's nothing you can do, right? I mean, I made 20 grand. It's okay, but the next trade is pretty risky. Here's a nat gas. We have several bull traps. I'm expecting lower lows, and if you're a buyer of nat gas, wait, be patient. The bottoms tend to be in the summer. August, late August, and preps. Again, logically, every good bull is the fast ones, right? Are in that January, February. No different here. We had January, end of January to March, typical high. But again, just be logical, right? If you make highs in January, March, then you got to have some type of lows prior to that. This one happened to be in January, so makes sense, right? You wait for those opportunities. And everybody's bearish nat gas in August, September, October, or even better in the winter. These are the typical results, but it's fast. You don't long-term trade nat gas, in my opinion. least I can't. I lose money if I'm a long-term view on that gas. It just has these jerky trades all the time. It's not uncommon, more common than not. S&P had the trap here. We did make a higher high. We talked about that 2 weeks ago, um, that we had the trap. If you're a bear, wait. Now you might be willing to sell it. You don't have to sell it just because of that, right? I mean, you might make sense to maybe turn on a shorter term chart and go with it, right? Maybe a 3 hour chart instead of a 3/4 moon. Jesus, you're almost a half a month, right? Um, Here's the euro, another main pivot that I like. We've already trapped it out. We already trapped this out, so we don't have to have the for every action there's an equal but opposite reaction, right? The Newton's law. Don't have to have that because it's already done it. A good trader. This is a main pivot, so if you ever get above that, the projections are pretty big, but it's slower than like the sugar we just looked at, right? Because it's going to take some time, which makes sense because the currencies do trade slower most of the time. Here's the gold. This is the only one I did actually chart the bottom. So, it came in before the eclipses, and you can see it squares out. Pretty typical deal, right? Here is, actually, it took about a 20-hour period for this this range, even though this is a 2 moon period deal, right? Quarter moon period. But that only took about 20 hours at the most. This squaring out did make it, nothing's really changed for us on the systematic approach. It just, again, if it's over, man, I just got to be a little cautious. Unless you're a fundamental guy and know something, again, if you're thinking these wild prices are people talking, who's going to trade $36,000 gold? Or who's going to trade it? Not me. So again, it's a mute point unless you're talking 1 ounce bars at the pawn shop, which is just nothingness, right? So in the futures realm, now you can trade some of this stuff through your Coinbase account, but it's a micro. It's a 1/100th of a size, I believe, here and there. But the eclipses, we balanced it out potentially, right, with this secondary event, because this was ahead of the eclipses. So the eclipses are in the middle of the road. Now we've balanced this out since the secondary event was the lunar eclipse. So again, it could trade sideways for a while, but typically the margins are so high, it makes sense that it's not going to be able to go up much. I mean, the only ones trading that now is the funds. So here's the silver, kind of a similar deal. Kind of went up to where we talked about. This was the cardinal cross area. Turned us, system long, of course, because it's getting chopped to death. And talk about a big loss, but God, you're risking 20-30% to the stop area on this chart, right? Again, this is not how you would trade silver logically. Here's cattle did make a new high, and then kind of failed, which makes sense, right? It's not a brand new high. We've been making highs every year now for a few years, new all-time highs, right? So the deferred months making new highs, the spot markets making new highs. Definitely tells you to buy the dips. Here's a dip, maybe even buy it where I get stopped out, right? It makes sense. Or if you want a bigger dip, buy it down. Now, again, this is December that we're trading. Maybe a bigger dip would be down in here on some type of little trappy deal. Here's the Bitcoin, again, 52% down on the spot chart from this high level, which again came in a couple weeks after the eclipse. And you can see this one was 1 week before, but the secondary event was in the middle. So we kind of balanced that out a little bit. This was 8 weeks from low to high. This is 8 weeks from low to secondary low, or 8 moon periods to be precise. And from high to low, this low was 8, yeah, and then from here to here was 8, and then from high, that's what I was going to do, from high to high was 15 moon periods. So from this one, again, I'm just doing a quick cycle work, sorry, there is 15 right here, so another week and we'll be equal from high to high. Now obviously, if it's something's different, this will be probably a high, and that'll be 15 moon periods over, or boxes, or bars, I guess. Right. So this is our halfway between the eclipses is May 16th. So I'm going to kind of lean towards that, even though it's kind of projecting May 23rd. But I'm going to keep it a little ahead of schedule as a potential high, and that's if something's changed. Now, if this downtrend is still intact and this gap area is still in control, I think it could still be a low, right? I mean, just because we're looking at some type of cycle work doesn't mean that's got to be accurate. This is the main emphasis, this gap. This is a big dog. You can see this big bar down, which is money bar. This money bar has not been violated, and even if it did by a little bit, no big deal. Even down here, right? I mean, I think this is where you could, fill the gap, maybe even cover the close if you're a bear. Makes sense a little bit, or take profits if you pick the bottom, kind of thing. Let's move on now to the charts. Hang on with me. Okay, here's bar chart. We're gonna thumb through the charts again. This green line is the, and this little arch here, that's our previous solar eclipse, our last one, and the previous one before that is this red one. So again, concerning, right? When we made a lower solar eclipse close in corn back in here, this told me that this is probably a selling rally, right? Because again, the solar eclipses break the chart or the year into half, right? So it's a biannual look. This, you can see I got a green line from solar to solar. Let's just run that off, and you can see how important that is. I know it's pretty obscure for some, but you can see that a lot of this stuff works, right? This projected, this secondary event, missed it here. Again, this is a July chart, not a spot. I really need to look at that on a spot. But anyway, this is the corn. What a puke! It's, you know, it's just nothingness. Moving on. Here's the beans. You know, what kind of chart's that? Let's just move on. Here is the wheat. A little more charty. Again, a lower solar eclipse close told me to be careful of this rally. So far, it's true, right? So I kind of like the base. I love this pattern. You know, broke the trend, had a bear trap, and then a period of rest, and then these pivots started to get taken out, and up we went. So now again, as a long-termer, knowing how wheat trades, you know, it's hard to buy wheat at harvest, which is, you know, through that July period. I would be looking at next December wheat. Well, I guess this week, this more down in here, right? Logically, now unless something fundamental has changed, I'm not a fundamental trader. Here is the meal. Again, the biggest component of the beans, and the actually $1,700 margin is definitely doable, but you can see it just hasn't gone anywhere. We did have the previous solar eclipse down in here, and it did work, right? It had a pretty good aggression. This was the halfway point actually, so that definitely is notable. But just a chopper now. Here's the coffee, potential basing pattern, but or maybe this is a rounding high, right? Pretty high margin, pretty volatile. Typical for coffee. This is the resistance of the previous solar eclipse. Our current solar eclipse is down here, which again you can see we bought. Well, it was support across the board, these lows. Why? Because that was the solar eclipse close. Now, you know, a lot of people aren't looking at that. I mean, I am. Right? That's kind of my forte. But and also the high prior, the swing prior to, and the swing low prior. You know, so this swing, right, is to me the solar eclipse range. That's kind of important. And but the speed of it, right? 1, 2, 3, 4, 5, 6, 7 days range is pretty quick. Normally you don't get those kind of quicknesses, but anyway. So that sets up for faster trading if you're a swing trader or a time trader like myself. Here is cotton. This is the one that I liked all the way. I love this bottom. Talked about it all the way up. Aggressive. You know, I talked about it 2 weeks ago when I did the video that you buy minor dips. I mean, I thought there'd be a little more dip than that. I mean, we had a few outside days, so you did get some minor activity, but that's why I talked about buying these minor dips because it's trading like it's undervalued. Something has changed in the fundamentals that I'm not aware of. I don't like look at fundamentals, so obviously everything's new to me, but something has changed, right? You don't have to know all the fundamental. Actually, the stuff you read on the internet's crap, especially on gold, silver, crude. I mean, half that stuff is fake, but the chart will tell you, right? So you read through read the tea leaves. This was kind of telling you something was changing. You didn't know that until extended, maybe, you know, but like I said, a couple weeks ago, I was talking about it to buy the minor dips. You know, here was a one where it popped out the lows. Here's one where it popped out the lows. This one yesterday or Thursday popped out the lows. So again, makes sense, right? You buy the minor dips. Something has changed fundamentally. I don't know what. Here is the sugar. Again, here's that pivot we talked about, 20%. Secondary event, it can make a new low. Don't really matter. It's just the potential, right? It's like electricity. Everything is measured in potentiality. This is an out of the money play. Quantity versus quality, meaning you buy more. You know, if the margin is $2,000, you buy $2,000 worth of out of the money options, right? For the same amount you would buy the margin for. So you spend $2,000, more quantity, you probably get 3 or 4, maybe even 5 or 6 out of the money calls. You know, 1750 calls for the privilege of the potentiality. Now it's risky, right? You know, no. Let me pull it up. Let me see if I can pull it up this way. Sugar. Oh, that's March. We don't want sugar. We want to stay in the front. Let's go. Let's go November. That'll give us plenty of time. Oh, maybe. Let's go October. That's right. There's no November. October's plenty of time. And again, I'm going to assume on the spot chart it's a little different than that. So let's go 16. Let's go 1,700. Option prices. Well, it shows it here. You get 28 cents. So 30 at the high Friday. So let's assume the high, 30 cents. That's 30. 30 times 11.2 That's $336 per option if the margins are 2 grand. Let me see, times 8. Well, let's just use that. So you can buy 8 of them for 2,600. If the margin's 2 grand, then you can get more bang for your buck. Now these expire in September, so you got to understand that. And most of this is all speculative, but you don't have to worry about a stop. You let it go. I would get out of 4 of those when you double your money. That kind of trade, right? It makes sense. There's certain times when it makes sense to do that. Well, I totally went off the reservation. Hang on, let me get it back set up. Okay, we're trading November, but I'm going to use the daily nearby. So this is what they call the spot chart. And I think I'll just keep the spot chart up because it doesn't really matter for the rest of the stuff. But you can see, yeah, this is what I was trying to get across. This 74-day move, 62%. All right, in my opinion, whatever caused this, some big trader, right? Some big outfit, some big fund, more than likely, did this. Now that's their pattern, right? You look for patterns. Bull patterns, bear pattern. This is the pattern. So when we get to the silver, we're going to look at that pattern as well. I just want to remind myself, the 74-day, 62%, right? And that's, again, because this was the bullish market in the history of mankind. I mean, trees are dying. And all the way down, supply was getting less. And no exports. Well, of course, because you're out, right? You don't have anything to export because there's nothing to export. But it still continued down, dropped 62%. So 74 days, a couple months, a little longer than a couple months. All right, anyway, dead right now, but still pretty negative on the actual chart. Here's the crude, similar deal, right? Now you can't quite see it, but there's red and green mix. Definitely both eclipsed, both eclipses the previous and the current is at the same price level. This is a long-term support, in my opinion. Now, it doesn't mean that's a lot of money, right? I mean, that's just not a small little thing. I mean, this move here, though, was in hours. Yeah, I mean, you just stay out of crude. I mean, $12,000 margin isn't terrible. But, unless you're trading it or time trading it, options for sure makes a little sense. At least it's a tradable market, unlike orange juice. It's a little difficult to trade. Here's nat gas. Again, this is a spot chart, a little different than the November that we looked at, but you can see how drizzly it is. This big pop, again, right before the end of the, you were in the spot chart, so it, scary as hell. But, spot chart and nat gas is really wild. You better know what you're doing if you're trading in the spot chart. But it just shows how heavy that is, a true United States market. Now here is the S&P. We got long in here, right on the eclipse zone. Again, kind of the area of actual resistance, and it went through it like water. Same scenario as the cotton, right? It told me to buy minor dips. We haven't had any until Thursday. I had one lower low here, so it's trading undervalued. Again, I call it the Trump effect because of everybody knew he was radically gonna change stuff, and because he said he would, and that's what he's doing. Makes sense. It's a positiveness, I believe, on the way the big boys are looking at the stock market. Here's the euro, opposite of the dollar, same kind of scenario. You can see that both eclipses are in the same zone. This is a spot chart, but you can see just a dud, just a chopper. So take here and there. I like this pivot if it get above it. Maybe an out of money play there as well. But again, currencies are overloaded. They overprinted. Never took back any of their printed money, which usually is not how it works. Again, these governments are changing their own rules. It's like what China did with the silver. They changed the rules, and now that's a new fundamental. Here's the gold. Just a puke. This happened quickly, and we're within that range. It did take it out. It's leaning negative. Who's going to buy gold 36 grand? It's really a moot point unless you're trying to buy a 1 ounce bar. Who gives a rip, right? I guess it does to you, but again, as a big futures market goes, doesn't make any sense. Do you buy? To me, you buy if you. Again, I hate the word stacker, right? Silver is known for that terminology. Well, hang on, I'm gonna have to reset it. I don't know why. I guess it's been too long since I updated it. Well, you can see I hem-haw around. I'm definitely not a computer. I could go back and edit out these parts. I like to keep it real. My computer froze up a little bit and just took time for the charts to update. But anyway, this is the July chart. Let me pull back up the spot since we're looking at spot charts on this final finale. But you can see that this is significant, right? We are made a lower low by a smidge. Now, we don't know that this is a low yet. This little back rally hasn't proven anything. If it makes a new low, you won't even look at this, right? You'll just say, oh, it's just a continuation. Time-wise, it's pretty important as well. Makes sense a little bit that just a dog, right? This, again, I don't even know what the margins are. Well, I guess I can look. Hang on. I mean, it's been a couple, 3 weeks since I put this price. $61,000. I mean, again, is it important for you to know that? Well, yeah. I mean, that's part of. Oops, that's part of uh, the equation, right? Who even funds? What fund is going to buy? Back in here, they were, the funds were uh, probably trading in 100 lots. Now they're trading in one lots. So again, as the futures market goes, margins are critical. People think they're crooked. Again, that's the risk. I mean, this dropped half, for Christ's sake, $60,000. I mean, or more, 30,000, whatever it was. It's a big freaking drop, for Christ's sakes. You got to have at least margin enough to cover that. Yeah, 150 grand down to here. So margins aren't high enough, in my opinion. 61,000 just not high enough. Crude. What was it? The 74 days down on those other charts that we looked at. That was in the orange juice. Well, there's 74 days. So the orange juice showed that the fast decline was 74 days. So just by looking at that, I hate to even, because here's your speed, right? There's 74 days. So this area is kind of the projection. I know that doesn't make sense, and it's scary as freaking hell, but it's showing that, right? That's just how it is. I mean, they did it in orange juice. No one thought it'd go down there either, and it did. 74 days. This is the line. Again, your finger's pointing to it. Okay. So it's possible, right? That's all we're looking at is potentiality, so you understand where we're at. Now we also know that 87% break is pretty common. Let me get back to the low. Of all the bull markets in history, 87% is pretty common. Here's 75%, right? So that would be 87%, it looks like. I don't know why it's such a weird ass color, sorry. I did a lot of work. There's 87%. So it's projecting the same spot. So anyway, that's a potential, and this is the price zone. The time zone is middle of May. So that is a fast whop in the old head if you bought futures. Now, if you're stacking, you don't care, right? You shouldn't care. You just keep buying more. Now, again, I can't trade like that. My mentality is not low. I mean, I bought silver at 8, 9, $10, got out of it 50 and 70. So got out of, that's just cash. I had a few bars later on, whatever. I mean, that's how I trade. I don't like stacking. I'm a trader. I get out when it makes sense. If you can. Now, again, these big moves, man, the pawnbroker's either going to be a hero or a zero because they're trying to make money. They work on a small margin. The margins are the same, by the way, here as they are back in when it was $20, $30. So actually, the margins maybe even a little better back then. And they weren't afraid to buy. I mean, if you bought silver here and then all of a sudden it dropped to 40, you're going, what the? The smelters are behind, which again was all through here, right? Which projected that. Anyway. Anyway, I just wanted to kind of show you that, right? The potentiality of that is concerning to me. It's back to this old eclipse. I think $45-ish is kind of my target, logically. If I was bearish, I wouldn't wait for this, right? That makes sense. If you're hedging, right, or you're short silver, I wouldn't wait for that either. You got to kind of do you, because this could be all crap in a couple weeks. All right, let's look at cattle. This is the nearby, not the December. You can see both have made new highs if we look at the chart. So again, typical pullback is not uncommon. This pullback was pretty significant, but pretty common as well. It didn't change the trend at all. I made another new high. So it's a grinder. Not a surprise, right? Because we've been doing it now for a few years. Some surprise will be when all of a sudden we have that big bar down. Cattle are a little different than silver or certain stocks, right? They're held by only one conglomerate, maybe two. Again, here's the Bitcoin. You can see that 52% drop we had. So it makes sense a little bit that we have a recovery, a potential low, right? Here's that gap that I don't like. We're up on it on the spot chart. So again, there's your point, your finger pointing down. So squaring out of that range without any mathematics kind of projects a May 26 zone from this pivot, right? So yeah, I don't know. Again, I'm not a Bitcoin guy, but made sense to maybe look at this low. We know that a year break is the biggest break we've had in modern times. So again, I'm not too anxious on Bitcoin until we get into September. Again, October 6th was the high. So this was August. So I think, maybe the end of July, I'll be maybe looking at maybe longer term buying potential for Bitcoin, because again, we know it only breaks about a year. This doesn't prove anything yet, but we did break the pivot. The system is long. All right, I believe that is it. I'm going to sign off. And again, I kind of chip chop him hoed around because that's, again, I just go through these right with you. I will have to delete a chunk out because I freaking lost my computer. Anyway, I will, everybody have a safe and happy weekend, and don't overtrade. Keep it within the realm. Use your common sense, please. Everyone have a great rest of your trading. Well, have a good next week, since the quarter moons are on the weekends. Adds a little excitement. News, and if you're a news guy, the quarter moons tend to offer some newsworthy opportunities out there. If you're a news buff. Later.